Everybody, this is Mod 110, Week 4, and this is the first demonstration video. Our second video of the week was first demonstration video. You're going to need in front of you the new BOA 110 Week 4. I'm actually sending you a new one because the one that I sent you earlier today had some errors on it. So, sorry about that. So I'm going to send you this new one. You're going to need this for the transactions. You're going to need T account. Get about 2 or 3. You're going to need journal. You definitely need 2 journals. And then you're going to need general ledger. And I print about 3 or 4, probably about 5 of them just to be safe. And then for the last part, you're going to need a worksheet. You only need 1 of those. Okay? So we'll get started. If you're already comfortable with the T accounts, you could skip this video and move on to the second one where I'm going to be doing the ledger. Actually, on this video, I'm going to do T accounts and journal. T account to journal. So if you're already comfortable with that and you don't need to watch that again and you know how to do it, then go ahead and skip this video and go on to the next video where I go from the journal to the ledger. Okay? So let's get started with this one. We'll start with the T accounts and with the journal. All right. So we have our accounts here, our account numbers. They've been numbered. And we have our transactions. So the very first transaction is Carol Peugeot deposited $25,000 into Innovate Training's checking account for initial investment. Okay, what 2 accounts are affected? Well, we have cash that we didn't have yesterday. And we have, this came from the personal bank account, so it's nothing to do with inside the company. So we definitely know we're going to be dealing with cash. Again, make that one big because we're going to be doing a lot of cash. And we should be dealing with, if you said owner's equity, you are correct. It is going to be the capital. Capital. So I'm making those T accounts and then cash. Okay. So 2 accounts are being affected. We have cash, $25,000. The one that is going to be debited is going to be the cash because cash is increased by debiting. So $25,000 in cash. And then we go over to capital. If there's a debit, we know that there has to be a credit. And we know that we credit owner's equity by, increase by crediting it. So $25,000 under capital. Okay? Now we're going to go over to our journal. We're going to go ahead and put this as page 1. We're going to put our year, 2020. Our month is March. I'm going to put 03. And the date, 02. We always put the debit first. So which account was debited? If you look over here, cash. So we're going to write cash. And then $25,000. Okay. What account was credited? That is the capital. So I'm going to go underline under the next line. I'm going to indent a little bit, and I'm going to write Innovate Training. I'm going to put IT capital. And then again, we credit that one. And then underneath it, you could write for, since it's the initial investment, you can go ahead and write initial investment. All right. And then once we're done that one, we can check it off. Okay. Next one is March 5th. March 5th, so I'm going to skip a line here and put the 5th. And then I'm going to go over here to my T accounts. March 5th, paid $300, check number 402, for prepaid website maintenance for 3 months, March, April, and May. So this one's a little bit tricky now. This is prepaid web maintenance. So we're paying for something that we're not going to use, or we're going to use over the next 3 months. But we haven't used it. We're not using it now. So since it's something prepaid, just like our prepaid rent, this would be considered a what? If you said asset, you are correct. It is considered an asset. So I'm going to put over here, prepaid web maintenance. Okay. So how do we increase asset? We increase it by debiting it. So we're going to debit it by $300. Okay. And then since we wrote a check is the same thing as dealing with cash. So are we going to debit or credit our cash? If you said credit, you're correct. So $300 over there. So basically, in this case, we just traded one asset for another. So now we're going to go to our journal. We put the 5th here. The account that was debited, not cash, but the prepaid web maintenance. I'm just going to abbreviate that. And that was $300. Okay. And then the account that was credited, over here, cash. Indent a little bit, cash. $300. All right. Done with that. Oh, we're not done. What we need to do now is we need to make sure we put the check number. So you can go down the next line. Check number 402, and you can say for months March. And you can take an extra line if you need to. March, April, and May. So it should look something like that. All right, so we're done. We're going to check that one off. All right, the next one. Issued a check 143 for $3,005.50 to pay March rent. Okay, so this is not prepaid rent. We're not paying for months and ahead of time. We're paying for this month. So what accounts get debited and credited? Well, we're issuing a check, so that's spending money, so we're going to deal with cash. But what account gets debited first? Well, in this case, look over here on our expenses and our rent expense. So we go over here to expenses, rent expenses. And how do we increase an expense account? We increase it by debiting it. So we're going to debit it $3,005, and watch for that 50 cents. I told you we're going to be dealing with the pennies, so watch for that. 3,050 cents. So we paid a check, so that means it comes out of our. And if you said cash, you're correct. So do we debit or do we credit cash? If we're decreasing cash, we credit it. So 3,005 and 50 cents. Make sure we put that. Okay, bring to our journal. This was the 6th. Oops, skip a line. And the account that got debited was the rent expense. Don't believe my cat. She's complaining, saying she's hungry, but she was just fed, so she's just trying to make everybody think she's hungry. All right, rent expense. We debited that account, so we're going to go 3,005, and don't forget that 50 cents. That will throw you off if you forget it. Okay? And remember, we're skipping this the posting reference until we post to the ledger. Okay, so now what account got credited? Well, we wrote a check, so that's cash. We'll go over here to credit it, 3005 and 50 cents. And then again, you could write the check number. 143, and you can even say March rent. All right, check that one off. We're moving here. All right, received a check. So we received a check for $4,556.25 from Educational Institute for Curriculum Package number 2, check number 144. So what happened here? We received a check from an outside entity for a package that we sold them. So what account gets debited, what account gets credited? Well, we received a check, so that means it's going to go into our cash. We increase our cash by debiting. So cash gets debited. 4,556, and don't forget that 25 cents. Okay? All right, what account gets credited? Well, this is not accounts receivable because they're paying for it right now. This is not something they're buying on credit. They're paying cash for it. So that should go into over here under owner's equity. We write fees, income. It's revenue. Remember, revenue is the same as income. Okay. Do we debit or credit fees, income? Well, we increase an owner's equity by crediting it. So 4,556 and 25 cents. Okay, go to the journal. The date was the 6th. All right, what account got debited? Our cash got debited. So 4,556 and 25 cents. And then what account got credited? That was the fees, income. So credit that. All right, and then they wrote a check number 144. Okay, that one's done. That's just my dog saying he wants to play, and he's wondering why I'm not paying attention to him. So just don't disregard him. He's not growling at me like he's going to bite me. Okay. The next one, on the 12th, we paid $2,445.89 for salary pay period March 2nd through the 14th. Check number 145. So we're paying this cash for our salaries. So what accounts get debited? What accounts get credited? Well, we're paying it out, so this is considered an expense. So this would be a salaries expense. So we're going to write over here, salaries expense. And that is and we increase a expense account by debiting it. $2,445.89. Okay, that had to come out of our cash, right? We wrote a check. So we're going to go over here to cash, and we're going to credit it. $2,445.89. Don't forget about those cents. All right, go over here to the journal. Day was the 12th. What account got debited? That was the salaries expense. Okay. Got credited, debited $2,445.89. Okay. What account got credited? Well, that had to come out of our cash, right? So cash got credited. $2,445.89. And then let's write the check number. Check 145. And let's write the salary, the pay period is pay period 3, 2. We could take another line if we have to. Through 3/14. Okay. You can either write out the month or write it like that. Doesn't really matter. Okay. Check that one off. Go to the next one. Over here. I bought $1,222 in office supplies on account from Office Supply Incorporated. Account number 1120. To be paid in 90 days. So this is us buying office supplies. But we're not buying it with cash. We put it on account. So that means we are going to pay it later. Which means it's if you said liability, you are correct. And what do we call it? Money that we owe? It's called accounts payable. And over here, if you look, we have 2 accounts payable that we're going to be dealing with. This one is office supply. So I'm going to put AP, office supply. And then we're going to be also dealing with an asset. We're buying the office supplies. So what is going to be an asset from that? We're going to gain supplies. So I'm going to put over here office supplies. Okay. So what account gets debited? What account gets credited? Well, we're increasing our office supplies. That's an asset. So we increase it by debiting it. So we're going to debit it $1,222. And then we're going to put it over here in accounts payable by crediting it $1,222. It's even, no sense. Okay. Take the journal. The date was the 12th. Okay, what account got debited? The account that got debited was the office supplies. Okay. 1,222. And what got credited? Cash. 1,222. And let's see, what other information can we put down here? We want to put the account number. 1120. Pay in 90 days. Okay. That one's done. Check off. All right. Next one. Community Adult Education Institute purchases $10,459 for 3 curriculum packages. Number 3, on account. Their account number is 1012 to be paid in 90 days. Now, what's happening here? They're purchasing a package from us, and they're purchasing it on account. Okay? So, what 2 accounts are affected? What is it called when somebody owes us money? If you said accounts receivable, you said it correct. So accounts receivable is an asset. So let's go over here under asset and put AR. And I'm going to put the AR who they are, because we could have more than one AR, right? Adult, I'm just going to write adult ed. Okay? And which account gets credited, which account gets debited? Well, this is we're increasing our AR. We increase it by debiting it. So the AR gets debited. Okay, $10,459 even. All right, what account gets credited? Well, they purchased it from us, so we consider this revenue, or otherwise known as fees income. So we debited that one, so now we're going to credit this one. $10,459. Okay, go to our journal. The date was the 12th. Skip a line here. 12. The account that got debited was our accounts receivable, AR, adult ed, community, and that is for $10,459. And then what account gets? Well, that's our fees income. Otherwise known as revenue. $10,459. Okay, we could put here some more information, such as it is account number 1120, pay in 90 days. All right, check that one off. Okay, next one. Oops. Check that one off. All right, issued a check for cleaning supplies, $250. Well, which account gets credited, which one gets debited? Well, we're purchasing cleaning supplies. We're paying by check, which is the same as cash. So what gets increased? Well, we're going to have cleaning supplies. So we have an account for office supplies. Now we're going to have an account for cleaning supplies. Okay, we increase our cleaning supplies by debiting it, $250. And how did we get our cleaning supplies? We paid by cash. So we're going to go over here to our cash, and what are we going to do? Debit or credit? You should know this one by now. We're going to credit it, $250. Okay, over here to our journal. The date was the 14th. We debited our cleaning supplies. $250. We credited our cash. And that was check number 145. Easy peasy. Okay, next one. Purchased by check number 146 for inventory of student welcome packages. So let's look at what we're doing here. We are purchasing student welcome packages so that we can have them as inventory, so that we can resell them. So what accounts get credited, what accounts get debited? Well, we are purchasing inventory. So we're going to have on us now inventory. So we're going to debit the inventory. Now, that's a lot of money. 3,500. And we paid by check, right? Which means we paid out cash. And you pay out cash by crediting it. 3,500. Okay. Go to the journal. The date was the 18th. So I skipped a line. 18. What account got debited? It is our inventory. Okay. Inventory, 3,500. What account gets credited? Well, we took that money out of our cash, so cash gets credited. Okay. We wrote a check for this, so we're going to write check number. And blah, 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 blah. Check number. You don't have to go over here. You can just stay over here. 146. Okay. Looks like we ran out of room on this journal. So make sure this journal is numbered. This is journal page number 1. So I'm going to put this aside, and I'm going to bring my page number 2, and I'm going to make sure I put number 2 here. Put the year, 2020. Okay. So we're ready to go on for the next page. And the same might be true for our assets over here on our T accounts, but we can just get our second page. It's fine. Remember, this is just a worksheet. This is not a actual reportable document. Okay. All right. So let's check off this one. We did that one. So now the next one. Purchased a laptop from Economy Computer Equipment Incorporated for $942 on account. So what did we do here? We purchased a laptop on credit from the Economy Computer Equipment Incorporated. So what accounts get debited and what accounts get credited? Well, we came home with a laptop that we didn't have before. So we have our equipment. A computer is not considered supplies, by the way. Think of supplies as things that are perishable, or things that get consumed, such as paper, cleaning supplies, office supplies, staples, things that get used. Equipment is more like a computer, adding machine, things that that will last from accounting period to accounting period. And we're going to talk more about depreciation later on, probably in the next lecture, but not this one. But we will talk about depreciation. Okay, so what did we gain? We gained a computer. So we're going to go over here and create an account for equipment. All right. We have the computer that we didn't have before, so we got to increase equipment by debiting it. And it's 942. Okay. So we debited it. So how did we pay for it? We didn't pay cash, so we're going to leave cash alone. We bought it on credit, so that's a what? Liability. So accounts payable, we didn't buy it from office supply. We're going to buy it, we bought it from a different place. So I'm going to put AP, and I'm going to put economy. So I'm going to just say ECO computer equip abbreviation. Okay? And we debit or credit the liability. Well, we increase our liability by crediting it. So, excuse me, that's $942. All right. Go to our journal. This is March. Sorry. the 19th, so 0319. The account that got debited is the equipment. $942. The account that got credited is accounts payable. Eco, computer, equip. 942. Okay, and then down below here, we could write in some more information, such as the account number. All right, done with that one? Check it off. All right. Received payment from Community Adult Education Institute for $355 for account 1012. This is the Community Adult Ed making a payment on an account that they owe us. So remember earlier they bought, what did they buy? They bought some curriculum packages. Where are they? Where are you? Where are you? Where are you? Supplies, adult. Here it is. Accounts receivable, adult ed, community. Adult ed, community. Or community adult ed institute. Anyway, that's the account that they're paying on. So anyway, so what account gets debited, what account gets credited? Well, we're receiving a check, so or money. It looks like they paid cash. So we're receiving money, so cash gets debited. So we're going to take our and debit our cash account, $355. Okay. What account gets credited? Well, we're going to go over here to our accounts receivable, the adult ed right here. And we're going to credit it, which means we're going to reduce this accounts receivable by $355. Again, we're just trading one asset for another. Go to our journal. The date was the 20th. Skip a line. What account got debited was cash. Here, $355. What other account? Accounts receivable, adult ed, credited, $355. And then down here, we could write from on account 1012. Okay, and now we can check that one off. All right, next one. Sold 3 curriculum a la carte packages for $390. Check 10003. So we sold something that we sold them. They wrote a check, so that's the same as receiving cash for $390. All right, so what accounts get debited, what accounts get credited? Oh, I said 355, sorry. 390. Don't get those two mixed up. So we get money, so we're going to debit our cash, 390. And then what account gets debited or credited? Remember, fees income. Somebody bought something from us, $390. Okay, go to the journal, the date is the 22nd. What account gets debited? Cash, $390. What account gets credited? That's going to be the fees income. $390. And did they write a check? Let's see. Yes. Check number 10003. All right, check that one off. Almost done. Issued a check 147 for $211 for electric bill. So this is us paying the electric bill. So what accounts are affected? Well, we have an electric bill, which is a utility. So that's considered a utility expense. So I'm going to go over here to expenses. And we increase expenses by debiting it. So that was $211. $211. And we're going to decrease that, our cash. Turn it the other way. I'm going to turn it off. Okay. 211. We're going to decrease our cash by crediting it. 211. Okay. Go over here to our journal. Put the date. The date is the 24th. 24th. What account got debited? Utilities. Expense. Okay. 211. What account got credited? That was cash. $211. And that was for with check number 147. All right, done with that one. All right, here we go. Conducted a 2-hour webinar for Community Adult Ed Education Institute for $425 on account. And that's your account number 1012. All right, so this is something that we did, services we did, that they are going to pay for by putting it on account. So that's considered what? Accounts receivable. These people already have an account with us. They already bought something. Remember, they bought some curriculum. They made a payment. Now they're paying for some, or they're buying something else. They bought a webinar. So $425 goes on accounts receivable. We debit that. Okay, and then again, since this is money, this is income, we go over here and credit the fees income, $425. Okay, go to the journal. The date was the 26th. What account got debited? The AR, accounts receivable, adult ed. And we $425, increase that one. And then fees, income, $425. All right. And then check that one off. Next one. Paid by check. Check 148. $2,445.89 for salary. Pay period March 15th through the 30th. So, we did this before. We have salaries expense. And then we have cash. It's going to be affected. We increase salary expense by debiting it. So, it's the same amount. $245.89 is debited. And then over here under cash, $2,445.89 is debited. Is credited, sorry. Go over here to the journal. The date. The date is the 30th. What account got debited? That would be salary expense. And so that's $2,445.89. And that had to come out of cash, so we credit cash. $2,445.89. Write the check number. 148. And I'm going to write on here, down below that, I'll take an extra line, pay period. Let's see, 3/15, 3/30. March 15th to the March 30th. All right. Check that one off. Last one. Issued a check 149 for $6,000 to Carol Peugeot, owner of Innovate Training, for personal use. Okay. So where does this one come from? This one is a check that's coming out of the company to the owner. So it's going to be drawing. We're going to draw on the account. So drawing. And we're going to debit that. We're going to increase the drawing. Remember, it's like putting together a withdrawal slip. We're going to withdraw this amount. So we're going to increase it. $6,000. Okay? And then we're going to debit cash. Because we're going to reduce our cash. And I know there's a little bit of room here, but I'm going to put the $6,000 right here. Okay, and then I'm going to go to my journal. Again, this is the 30th. What account got debited? Drawing. $6,000. What account got credited? Cash. $6,000. All right, and then that was check number 149. All right, then we're going to check that off. And then what we're going to do, now that we're done with our journal, I want you to add your debits and your credits on this page. Put them down here on the bottom, double line it. Add your debits and your credits on this page, double line it, and then add the two pages together, double line that down here. We'll do that. I'll have those numbers for you at the beginning of the next video when we go to post to our journal. Oh, no, not to post to the journal. Post to the ledger. So after we've done that, after we did our totals and it balances, we're going to post to our ledger. And we'll do that in the next video. Okay. So I'll see you next time.